Hello, I'm Louise Macaulay, and welcome to the weekly wrap up, where I am joined by Michael Hewson from CMC Markets in London. Michael, we've seen strong German GDP figures out this morning. Are German consumers beginning to spend more on the back of lower oil prices, or what are the main drivers behind the fourth quarter's 0.7% growth figure?
I think the biggest driver for the German GDP beat was, domestic consumption, consumer spending. We've been seeing retail sales and consumer confidence increasingly do better over the course of the last 2 or 3 months in Germany, largely as a result of the decline in oil prices, and I think that's encouraging German consumers to actually open their wallets, and you're certainly seeing that reflected in those German GDP numbers in the fourth quarter.
We saw the Bank of England inflation report out yesterday, and some analysts believe that we could see a rate hike sooner rather than later. What are your thoughts on this, and what does it mean for the UK economy going forward?
I think a rate hike sooner rather than later is unlikely. Looking at the path of inflation at the moment, the likelihood is we're probably going to see it go negative in the next 3 to 4 months. We've got an election coming up in May, which is probably going to bring about a great deal of uncertainty leading up to that, which means that we could actually see a little bit of weakness in the UK economy. But overall, I think until such times as we get an increase in wage growth, I think any rate hike is probably not going to happen much before the beginning of next year.
Taking a look at US data released this week, advanced retail sales dropped 0.8% month-on-month in December. Ex-auto sales dropped 0.9% month-on-month in January, and initial jobless claims rose to 304,000. What does this mean for the US economy, and how do you see this data changing in the near future?
Yeah, I think what's been confusing, about the recent economic data that we've seen out of the US is that despite a fairly strong labour market, we certainly saw that reflected in non-farm payrolls last week, and obviously the adjustments higher to the November and the December numbers, while jobs growth appears to be coming along quite nicely, consumer spending still remains at fairly low levels, and retail sales over the past 2 months have declined 1.7%. Durable goods orders have also declined over the fourth quarter, over 3%. So that suggests to me that while we're seeing a significant improvement in the US labour market, US consumers, despite the fact that consumer confidence numbers appear fairly robust, that confidence is not translating into increased spending. And that, for me, is a worry. It suggests that the US economy is in nowhere near as robust as people think it is. And let's not forget that 70% of the US economy is based up on the back of consumption. So those weak consumption numbers do worry me slightly. And I think, if we're looking for a rate hike sometime in the summer, I think that's overly optimistic. I think we could see that expectations of a rate hike delayed.
Now, all eyes remain on Greece, but what are the main events we should be keeping an eye on next week?
Well, Greece notwithstanding, we've got the FOMC minutes, which are out on Wednesday, along with the Bank of England minutes. I don't think they're really going to shed too much light on the central bank's thinking over the course of the next few months that we don't already know. Obviously, we have UK CPI and UK wages. I think overall, despite the direction of the economic data, it's really going to be whether or not we get an agreement on Monday. Obviously, it's a US holiday on Monday, which will mean that volatility will probably be a little bit higher and liquidity will be a little bit lower. And obviously that's going to be a concern. But overall, I think what we want to see is some evidence next week that Greece and EU leaders are coming closer together on some form of compromise. And until such times as we get any sort of clarity on that, I think we're going to continue to see markets gyrate quite sharply as investors fret about the prospect of a Greek exit.
Well, that is all from me today. Join us again on Monday for more of the same. Goodbye for now.